Okay, let's go through some dry runs of trade system use. Let me just do a quick dry run to show you how this works. When we get the vertical signal line, we do not enter the trade right away. In our settings, let's take a look at that. In the settings, I currently have how many pips for the delayed entry, 12, and that will control the entry trigger line. And then initial stop and target, 15 pips, 30 pips. The entry line color in the pending mode is yellow. The entry line color, once price presses through that line, turns to white. And then we have red and green for the target and the stop line. So let's go through the sequence of events. Price rolls over. We start detecting downside price momentum on the pulse indicator. The bar closes. As soon as that bar closes, 12 pips down, we have the pending entry trigger line. So what do you do at this point? It's simple. You right click, you go into trading, and in this case, you would put in a sell stop order, and you would lay that sell stop order right on or just slightly below that line. So basically, you're waiting for price to come to you and can confirm that it will have follow through and continue to go through our entry trigger line. And then what happens? The market goes sideways. So what do? Well, you have a pending order, bar close by bar close. You have a pending order. That's a sell stop. 10, 11, 12 bars goes by and you're not filled. What do? Or you see price hanging nowhere near the line, going away from it. I go and I kill the order. I delete the sell stop and I wait for a new setup. So momentum dissipates, the market goes sideways. We go back into the neutral zone on price. Then price starts picking up some downside price momentum and price triggers another signal. 12 pips down from the closing bar price, your pending entry line appears. You take in a sell stop, you right click, go to trading, and place a sell stop right on the line or just ever so slightly below. And the reason you put it slightly below is so you can see it to go grab the order and move it, or right click on it, delete it. So you now have a sell stop sitting there on or near, right on that entry trigger line. It takes a few bars, 8, 9 bars later, and it presses through the line. It fills your order. Or entry trigger line immediately shifts from yellow to white on that event, and in that exact moment of time, we have a 15 pip stop appear and we have a 30 pip target appear. So we have all the reference lines we need to know. Now that my order's filled, right away I'll move my stop. So I'll move my stop for my active order up to that red reference line. I'll move my target to this line or lower. This is just a suggestion of saying, hey, this is your 2-to-1 reward to risk point. Don't go for a target any less than this. At least don't get into the trade initially going for less than 2-to-1. If you get in the trade and it goes halfway or 3/4 of the way and oscillates for 3 hours and never goes back up to your entry price or down to the target, and you just want to get rid of the trade, that's fine. You should at least, though, out of the onset of the trade, give the trade a chance to at least reach a minimum 2-to-1 reward to risk target. So you get in the trade. After a little downside movement, the momentum dissipates a bit. Eventually you get movement. Okay, now price presses through the 2-to-1 target zone. So let's say you still are holding your position, that you've got your actual target way out at about 4-to-1, and you're just going to manually manage your trade. As soon as price presses through that level, you're going to see this stop line move to break even. because the target, the minimum target level has already been achieved. And price oscillates. Price starts trading a little bit lower. You're to 3 to 1, now you're to 4 to 1. Now it's a matter of, at that point, even as price continues, you'll even see the stop line continue to move. It'll be moving in 15 tick increments. So it's kind of reminding you, hey, bleed out that risk. Take risk that's at break even and move your risk to no risk, but in the money, so you can at least lock in some profits. You can see we had a big burst of momentum, nice push. You can see the trade intensity, though, is really dissipating. So if knowing how I trade, I would be getting ready to flatten this trade, starting to get some lift. Trade intensity, I'm out of here and I've locked in 3 to 1. I wouldn't be waiting for the market to come all the way back up here. These are, I'm on a 5-minute chart. These are quick hit trades. I'm not trying to stay in a trade for all day long on a 5-minute chart. And we'll get into in forward videos, what are the best times a day to trade when you're on these lower time frames, around what events, and what are the best instruments you should be trading with the system. So there you have it. Just wanted to show you a quick dry run of the sequence of events with the various reference lines and how we enter trades with either buy stops to go long or sell stops to go short. We don't jump into these trades with market orders. We let the market come to us and fill us to trigger our entries. So in the next videos, we'll go into this in more depth, but I just wanted to do one quick initial run and go through the sequencing so it starts to make sense to you.